Okay, so we might as well do a quick sound check. Want to make sure you guys can hear me okay? Yeah, we're scheduled to start at 1:30 p.m. Pacific. Okay, awesome. Can you also see my first slide? Because I'm going to get started shortly, and then Tammy is going to, okay, perfect. Tammy's going to give you a presentation after that, and then I think we'll probably take questions at the end, okay? And we'll see how much time that we have to take questions. All right, well, we'll get started in just a couple of minutes. Okay, good afternoon, everybody. We're going to get started. First, I'll give my part of the presentation, and then Tammy will follow me. It's basically going to be an introduction to advanced Fibonacci time and price analysis. And I call it advanced because we're not only using single retracements. We're going to be using retracements, then what we call Fibonacci extensions, and then what we call Fibonacci projections. And we're also going to go over the timing work and give you an idea of how we do that. So I did do a sound check earlier. Just want to make sure we're still good to go. and I'll get started. So if somebody, okay, perfect. All right, thanks for the confirmation. All right, so let's get started. So first you want to ask, why do you want to use this type of Fibonacci analysis? And basically it's because it enables you to identify high probability, relatively low risk setups where the risk is clearly defined along with the targets. I think one of the most important things that you need to know when you get involved in the market is when you wrong the trade, okay? But this is what this work will give you. Now, it works on any time frame data and essentially any good market data. So for example, it's probably not going to be applied to penny stocks. Typically, you don't have enough data in there, and it's just not going to work. But most of the major stocks that you've ever heard of, Tesla, Nvidia, Google, all those, as long as you have good market data like those, you'll be able to use this type of analysis. Now, I've applied this method to stocks, ETFs, futures, and the Forex markets. And actually, I also need to add Bitcoin. So I've done Bitcoin, and I think I've done Ethereum in the past. So it does work with those also. It's an excellent methodology to use with option strategies, okay? So many of the people that we work with will use option strategies, instead of taking trades outright, but either way is good. And then also you can see things in the market that you will never see using indicators alone. So for those of you who are not familiar with the Fibonacci number series, I'm going to go over those quickly. This is basically the number series where you add the prior number to get the next number in the series. So for example, the 13 plus the 21 is going to be 34, and so on out to infinity, okay? And one of the things that we've found in between these numbers as you move out to infinity is that we have the golden ratio basically in between these numbers. So for example, 21 times 1618 gives you the next number. Well, close enough, 33.97, okay? 55 times 1618, that gives you 88.99, basically the next number, which is 89. So the golden ratio is in between the numbers. We're not actually going to use the number series, for this work. We're going to use the ratios derived from the number series, okay? Now, the ones that we use every day, basically, 382, 50%, 618, 786, 100%, 1272, and 1618. And for very, very large swings, we may also use 236. I do use 2618 as my third target for any trend trade setups, because those targets are always 1272, 1618, and then 2618 is target 3. And every once in a blue moon, we'll use 4.236, okay? Probably not very often, but sometimes if you have a runaway move, you can also run like a 4236 extension, and that also may offer resistance. All right, let's take a look at, well, I've shown you basically where, the 618 or 1618 comes from. It's in between the numbers in the number series. But what about some of these other ratios, okay? Well, they're all related mathematically. So for example, you have the 100% or minus 618, that gives you the 382, or something like the square root of 618 gives us 786. Square root of 1618 gives you 1272. You can see how all of these are related mathematically. All right, so I'm going to start with how we look at price. There are three different things that we look at: price retracements, price extensions, and price projections. So I'm going to give you a couple of examples in each, and then we'll get into the good stuff. So For price retracements, we're basically taking a prior low to high swing on the chart, and we're using these retracement ratios, 382, 50%, 618, and 786, to identify potential support. And otherwise, we're taking highs to lows with the same ratios for potential resistance. So here's an example of that. This is actually a daily chart of Square. And here's where I measured a prior major low to high swing. And then you run the retracements. And again, we look for potential support or resistance. We don't always get it, but we watch for it or anticipate that possibility. Okay. Now, here, we didn't really see anything at the 382 or the 50%, but notice right around the area of the 618 retracement, you saw a nice healthy reversal. All right, here's your next example of a retracement is in AMAT. This is a 30-minute chart measuring a prior major high to low. And here are the retracements, and you can see nothing really here at 236. 382, you did have a reaction off of that area. You had a micro reaction off of the 50%, but you had a much bigger reaction off of the 618 in this case. And I think I'm going to answer this question before you ask it. What about all these swings? Well, you would also run these swings, okay? But in the case of the examples, I'm just showing you one so you have an idea of, what we're doing with each individual swing. Okay, so that's it for retracements. For Fibonacci price extensions, they're essentially retracements beyond 100%. So you're still only using 2 points on the chart. We're taking a low to a high, but then we're extending by the ratios of 1272 and 1618. And then, of course, we have the 2618 for target number 3. So, for example, if we measure a low to a high and extend using those ratios, we're looking for possible support there. Or if you take the prior high to low swing and extend upwards, then we're looking for possible resistance there. So a couple of examples we have. This is a daily chart of Facebook. So here's an extension, high to low. Notice that twice the market reacted off of the 1272 extension with this first swing. And then here's another swing on the same chart, high to low. You'll see we didn't have any reaction really at the 1272, but you can see at the 1618, within a couple of pennies, we did have a really healthy reaction and pullback, and that did act as resistance. We're not going to expect every single level to give you a reaction, okay? But there's a way that we work with this that's going to be really helpful for you. All right, this next example, this is also an extension. It's where I'm measuring a prior high to low in Intel daily stock. And you can see the 1272 really didn't give us any reaction, but the 1618 actually in this case hit to the tick. So 5085 was the extension, 5085 was the actual high. And again, we had a nice pullback after that extension. One of the things that I say every single day is many moves tend to terminate at extensions of prior swings. This is why we always ratchet up stops when we get towards the extensions. They're not always going to turn on the extensions, but at least, you're protecting yourself for when it does. All right, let's see. All right, so next is Fibonacci price projections. Now, these are slightly different because you use 3 points to run these. And this is where we're basically comparing swings in the same direction. So for example, we'll compare a low to high and then project from another low to compare it to another swing. I always use 100% and sometimes 1618 for these projections, okay? So run the low to high from another low, possible resistance, run a high to low from another high for possible support. So here's a couple of examples. This is a daily chart of crude oil. Now here, I'm basically comparing these two swings in the same direction, okay? So you have one high to low that was $3.12, projected from the next high, which ended up being $3.11, okay? So it gave us 55.87 as the possible support. 55.88 was the actual low in this case, and we ended up seeing a really nice healthy rally after that support held. So that's projection. This next example is Google on a 60-minute chart, but this is going to also show the other projection. So we have a low to a high projected from a low. Now at the 100%, we really didn't see any reaction there. But in this case, at the 1618 projection, we did. That came in at 1097.88, the actual high. Again, not looking for perfection, but we're looking for close enough. 1097.51 ended up being the actual high. Okay, so what, within 30 cents or so. So that's another example of a projection. One more, this is a 30-minute chart of S&P futures. And if you look at, this chart overall, you can see it's a pattern of lower lows and highs. So, we're going to want to look at possible shorts when we have a pattern like that. So in this case, we're taking prior corrective rallies and then comparing them to any new move, and we would have compared it here also. Okay, but in this case, this is the example. So projecting 91 points from this low here gave us 30.97 as possible resistance. Actual high was made at 30.96 So it was 91 point rally, 90.25 point rally, very similar. Okay, I call this symmetry when you're using the 100% projection, because you're looking at similarity or equality when comparing swings in the same direction. And you could tell that these two swings are very similar. All right, here's another example for those of you that watch Bitcoin. Again, I always want to compare the swings. Now, in this case, these two swings are a little bit different from each other, but we ran both of them to look for possible resistance on the way up in Bitcoin. And notice that the swing over here before it turned back to the downside was very similar to this swing right over here, the 157.50 versus 158.35. Again, not a perfect hit, but similarity or equality is what we're looking for. And more often than not, you're getting similarity with those prior swings. Okay, so those are the three types of price relationships we use. We will get to timing in the last slides here. But here, a very powerful trade setup that I use every day is called a Fibonacci price cluster. Now, the definition of a price cluster is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. And it identifies key support or resistance, and it would be better support or higher probability when you have more than one price relationship coming together. So I'm going to show you an example, starting with a blank chart. And I'm going to ask you this question, and I will take questions after the presentation, but actually probably after Tammy finishes. But here, what would have told you to look at a buy in Tesla before this rally started? And I don't expect anybody to give me an answer. Some people will, they'll see a pattern or something like that, and that's great. But again, I'm going to ask why the 611 low was important in this case. And here's my answer. Okay, so here's Tesla. Now, here's one price projection. We took the prior high to low swing, projected it from another high, gave us 167.07 as a projection. Same chart, different swings. I had another prior high to low swing. This was $31.90. I projected that from this high over here, gave us 166.97. Now, it wasn't exactly equal, but it's very similar, 31.90 versus 31.46. Okay, same chart, different swing. I had a little micro low to high swing where the 1618 price extension was 167.43. Okay, so now we have 3 levels so far. And then this might be the last one. Here, I have a smaller swing. I mean, we would have also done this swing low to high and extended, but this swing we'll also use by itself. We had the 1272 extension of that swing at 167.23. So this is the way it looks when everything comes together, and it's from all these different swings. So the setup was a buy zone at 166.97 to 167.43. It included two 100% projections, a 1272 extension and a 1618 extension, gave us this cluster. We made the actual low at 167.41, which was directly within that zone. And then it was followed with this very healthy rally so far. Okay. Well, I mean, this is not what the chart looks like now, but I can probably show you the current chart near the end. Okay. All right. So let's take a look at something else. What would have told you to take a trade against that zone? Well, we like to use what I call a trigger, and the trigger is essentially the price action that tells you that it's worth placing a bet against the zone. So here is where the support came in, but we go to a lower time frame chart to trigger an entry so that it triggers you into the trade as close as possible to where your definition of risk is. But for swing trades, I like to use a 15 and or a 30-minute chart. The 15-minute chart will get stopped out more often than the 30-minute chart, okay? But if you want to be aggressive, 15 is okay. In this example, it is a 15-minute chart. And our trigger is the 834 EMA crossover. So that occurred here. And then what I also like to see is a shift in pattern. So from the left-hand side, this is a pattern of, you know, lower lows and lower highs. I wanted to see it take out a prior swing high to suggest that we might shift to higher highs and higher lows. Okay, so those are the two elements of the trigger. Now, if you have an issue with trying to figure out, oh, well, what swing high does it have to take out or what swing low, you can just use the moving average crossover, okay? But I do like to have confirmation with the pattern shift also. So there was your trigger. And let's take a look at, well, there was actually a secondary entry in Tesla. So after the original setup that I just showed you, you know, there are always other times where, you know, you can get involved, whether it's in on a lower time frame chart after the original setup, or even on a daily chart. In this case, the daily chart just gave us a simple 618 retracement back to the last low, plus we had 100% of these two projections, came in at 175.82 to 177.37. Actual low was directly within that zone at 176.92. And again, that was a, you know, a secondary entry to the original setup that I showed you. Okay, I want to give you a couple of recent setups. These are ones where you can look at pullbacks just to, you know, show you that we've got some working now. And this is a daily chart of Meta. This was a pretty simple one. I do color coordinate my levels so that I know, since there's a pink line in here and a red line, I know that it's a 618 retracement and a 100% projection that came in from, you know, one of these prior swings and then prior low to high. Came in at 581.33 to 583.80. Actual low is 581.61, directly within the zone. And so far, we've seen a rally of $18.49, but our initial targets are 608.75 and 616.14. So, you know, we can look at pullbacks if you want to. And initially, your max risk is either underneath the low made or underneath the low end of the zone, which would be underneath 581.33. Either one of those is fine. Targets for a trend trade, first two targets are always 1272 and 1618. Okay, another one that you know, we've been following for a while is Apple. And on the weekly chart, this is where we found symmetry. One of these prior swings was very similar at 41.78. Gave us a projection at 195.45. And again, not a perfect hit, but 41.23 versus 41.78, not bad. And this shows us our bigger picture target, which remains at 248 and has remained there since early August, since we made this low. But now we have secondary entry that we saw recently, and it came in with, in this case, a 618 retracement, again, the pink line, and a symmetry projection. There were also a couple of levels underneath that, but we didn't go to the second area. So we made a low at 221.33, which was just slightly above this 618 retracement. So far, we've seen a rally of around 998, but we still have higher targets. So we would still have you, looking at our pullbacks. We actually follow Apple in the trading room each day. So, we can always give you pullbacks on the 30-minute chart, because these are the upside targets we're looking for from different swings. We're going to have one target from this swing. You're going to have another target from this high to low swing, an older target. And then we also have this larger target that I showed you before on the weekly at the 243.89 area. So Apple is in process right now, and the initial risk was, just underneath this support. All right, here's another one that was recent. This is where we actually have time and price coming together. So I will get into the timing shortly, but I just want to show you this histogram represents Fibonacci cycle timing coming together. And it came together between the 10th through the 12th, okay? Now we had a cluster that came in at 213.68 to 214.85, okay? Kind of a wide zone, but if you get into this zone, to go to the lower time frame chart, look for your trigger. We did see our triggers, and so far we've had a rally of 834. It might be slightly more by the end of the day, but I took a snapshot of that one this morning. But know that we still have higher targets in this one. So potential targets, well, we have a target off of a minor swing, but the target off of this swing is included here, but you have an overlap of at least two extension levels, 227.54 to 75. So that's our first real target for IWM. But also we have this prior major swing that held way back when. We still haven't reached that target. So if we go beyond those targets, then this is the next target that you would look at in IWM, okay? Now, sometimes this matches with Elliott wave stuff, and sometimes it doesn't, but I know that it does enough that somebody told me that they did extremely well using the Elliott wave work plus this work. All right, this is an example. This came in off of a daily chart. This was in NASDAQ. This was a daily setup. We also had timing. I had timing the 29th through the 31st. Market was going straight down into this timing. So what we look for with timing is a reversal of whatever the market's doing right before that time window. So since we were going straight down, we were anticipating a reversal back up. And we also had this key support coming in at the same time. So you had time and price come together, 187.01 to 187.55. We had a 100% projection, two 1272 extensions, and a 618 retracement all come together within this zone. It doesn't look like a lot, but this was a rally of 721 NASDAQ futures points, okay? Now, sadly, we didn't get the follow through, but this was a trade, okay? You would have been stopped out with a profit if you used a trailing stop. All right, let's see what else we have. So here's an example. Like if you wanted to use this for a day trade decision, you can use a 1-minute chart, a 2-minute chart, 3-minute chart, 5-minute chart. Some people will even use a 377 tick chart on the indexes, which we show every day. We use a 120-minute chart next to a 10-minute chart. So there are a lot of day trading opportunities there. But here's an example of a trigger against what I just showed you on that daily chart of NASDAQ. Took out prior swing high. You almost had the crossover, very close to that. And again, then the risk at this point would have been either under this low or underneath the low end of the zone. Okay, so basically the way we make money is setup plus trigger equals trade entry, and then you manage it. And managing it basically means, putting in your initial stop, then deciding if you're going to go to break even or when you're going to start to trail your stop up. Another example we have is in IWM. Again, we've got a high to low projected from a high, another high to low projected from a high. You can see how these were very similar to each other. Then we also had a 618 retracement of one of the swings and a 786. It was probably of this smaller swing. Zone came in at 194.80 to 195.19. It hit, it held, it met target number 2. Okay, so that was again, also an IWM example. Well, this wasn't a setup from today. This was the last time I gave this presentation, but we did have a healthy support zone in Netflix right here, the 660, 55 to 661, 48 area. And again, you can use daily levels for day trades. You don't have to take this stuff overnight. Just wanted to show you that you can do that and show you an example again of a trigger. So here's where the low was made directly within that zone. Here's a prior swing high that we took out. And here is the 834 EMA crossover. So it triggered around 664-ish, okay? So it was definitely good for a day trade. Honestly, I don't remember if it continued after that or not, but I just wanted to get that point across. You can definitely use daily levels for day trade decisions. Another IWM example, again, you know, we like clusters. We had a projection from a prior low, would have been projected from here. Then we had a retracement of one swing, or retracement of another swing, extension of this high to low. All gave us a cluster, 20043 to 201 even. You had a 786, a 100%, a 1272, and a 618 retracement. And from there was a drop of $5.39. All right, let's see what else I have. I think I may skip this because, I wanted to get this point across. When a zone doesn't hold, okay, so this was in the S&P cash, we had big resistance at 51.43.56. So when it doesn't hold, it also tells you something. So a lot of times when it doesn't hold, you may even sometimes see an acceleration through if it doesn't give you the reversal. So that's something to keep in mind. And next, I'm going to do some timing examples for you, and then Tammy can get started. So what about Fibonacci timing? We use the same ratios that we use on the price axis of the market on the time axis of the market. So, for example, we will measure the time between a prior high-to-high swing and then multiply that time by the ratios and project the results in the future. When we see time clusters, we look for a possible change in trend. Also, when time and price come together, you also have a much higher probability trade setup. So here's an example. This is a daily chart of Facebook. Now, we already had a setup at the 332.72 to 334.31 area, but here's where we also ran timing. I had high to high, 618 in time came in July 19th, a low to high, 100% in time came in July 20th, a low to low, 1618 came in on July 19th, and another low to low, 786 in time came in July 21st. We were trading straight down into July 19th through the 21st. The actual low was made on the 20th, directly within the zone. So we had time and price come together. It was followed with multiple buy triggers, starting with day trade triggers. And in this example, you met two targets on the upside. Okay, here's another example of timing. This was in NASDAQ cash. Here, I had a prior high to high swing. August 22nd came in with a 618 in time. We had another high to high, August 22nd, 100% in time. Another high to high, 100% came in August 23rd. A low to a low, 50% in time came in August 23rd, and a high to a low, so it would be this high to this low, 786 came in August 23rd. So August 22nd through the 3rd, we had timing. We were going straight up into the time window. We also had key price resistance come in, 786 plus symmetry. And again, a really healthy rollover of 1537 off of timing. Well, actually, it's time and price. Another example of timing, this is S&P Cash Daily. We had a high to high, 1272, July 16th. Another high to high, 786, July 16th. Another high to high, 100%, July 17th. low to low, 618, July 18th, another low to low, 100% July 15th, low to low, the 16th, and another low to low, July 17th. So 1, 2, 3, 4, 5, 7 cycles that came due between the 16th through the 18th. We were going straight up into that time window, so we were going to anticipate a possible reversal. You don't always get a reversal, okay? Same way that support and resistance don't always hold. But the timing is still worth watching for when it does reverse the market, okay? One other example, and Tammy will be ready for you shortly. This is a timing histogram that comes with the, Bob Miner is my mentor, and he has the program called Dynamic Trader. And he has this histogram timing where you can just, you know, pick the swings on the chart that you want the market to analyze. And then, like in this case, I projected, oh, actually, I projected from this high to the next possible low. Okay, and the histogram will spit out dates that stand out with timing. These are done with calendar day projections rather than, you know, the daily projections. And here you can see it says dynamic time projection, low August 5th, August 6th. Okay, so, you know, when the market's going straight down, this is one of the things you always want to know. When might it reverse? For two reasons. You know, one, to possibly be a buyer. And number two is if you're short, to be ready to get the heck out of the way, you know, ratchet down your stops and protect profits on shorts. Now, we didn't know that this was going to happen for sure. You know, I'll always say that. But it did trigger an entry against the timing. We made the actual low on August 5th, and there was a rally of 442.72 points that followed this histogram timing. And this is kind of what it looks like on the program. You know, I can run this, this little histogram, and then I look for where are the standout dates. Okay, you can see that these stood out here. Okay, now these you can also use, but these were, you know, really standout ones. And you can see that that came in August 5th to August 6th. All right, I think that, actually this might be, well, here, this is my last chart. This was S&P cash cycles, March 13th through the 15th, into timing. You know, in this case, I'm just showing you 3 cycles. I like to see the minimum of 3. Sometimes I will use time symmetry by itself though, which would be, you know, when you're comparing swings in the same direction, if they're the same time, it might actually work. You may see a reversal without having more than 1 cycle. But anyway, we ended up putting in the low here, exactly on March 13th, which was directly within the window, and had a nice rally from there. So this is going to conclude my part of the presentation. I'm going to change the presenter to Tammy. You sure? Yes. Okay, so now it's going to be her turn to take over, and then I will stick around for questions after we're finished. And I think what I need to do, Tammy, yeah, that's her email. We don't.
Can you hear me?
If you want to get your screen set up.
Hold on. Can you hear me?
And also we'll need you to do a sound check. So I'm going to shut my sound.
Okay, let's see. Show screen. Number 2. Can you hear me or no, Carolyn? Check. Testing, testing. Let me see. I don't hear. Testing, testing. Can anybody hear me? I'm not sure if anyone can hear me or not. So let me know if you can hear me or not. You can if you want to. Can anybody hear me now? I can't hear, but I can sign in elsewhere. Let's see. Oh, hold on. Send chat to. Don't know if you can hear me. Can anybody in the audience hear me? I can't tell if anyone can hear me or not, which is an issue for recording this, obviously. Let's see, or can you see my screen? I can't hear, but can sign in elsewhere. Okay. Can anyone hear me that is in attendance for the meeting? I can't see anything in chat. And Carolyn, if you can hear me, I did send you. You can hear me. Okay, thank you. Atilia, appreciate your help. Okay, great. Can you see my screen? Yeah, okay, great. All right. For some reason, I don't see the chat correctly. So I am not seeing the questions in the chat. I mean, anybody responding to me in the chat. Okay, there we go. Now I see it. All right, let me go ahead and get started here. Hey, hello, everybody. I am Tammy Marshall. I'm also known as the Fibonacci Princess. The Queen is my my mentor and has taught me everything that I know. And just to let you know, I have coached a lot of people over the years. At this point, you're familiar already with some of the material, but I'll show you a few more things in addition. Just to give you a little bit of information about myself, I became interested in wanting to trade for my husband around, really it was earlier than 2010, but he would show me some option strategies on Thinkorswim. And then I met Carolyn on a trip to the Grand Caymans, and she was looking for someone to mentor and train in her room. And since then, we've worked together, a couple different companies, several different companies at this point. Now we are at Elliott Wave Trader, as you are aware. My goal is to teach you how to trade more accurately using these levels, of course. And I'm not gonna, Carolyn's already said a few of these things, so I'm gonna skip over anything she's already gone over. So, she was talking earlier about price projections and symmetry. Okay, those are the same thing. They're the red lines that you see. So price projections are also called symmetrical projections. And do you think that looking at these prior swings in the market gives you a good way of predicting what moves may happen in the future? If so, you are onto something, because it is called symmetry. It is called the measured move. So when you look at a chart and you see patterns, that was how I knew this work was for me, was because I was looking for something like this in my trading style personally. I wanted to find something that gave me defined levels instead of just relying on fundamentals. So this technical analysis really fit into something that I was looking for. I see symmetry every day and every time frame in the markets. We see it on a monthly, weekly, daily, and intraday time frames. Intraday time frames, of course, it just means the minute time frames. We see it on 1 minute, 5 minute, 10 minute, 120 minute, 30 minute. You think about it, we see it. Symmetry for your trading plan. If you do not plan, you are planning to fail. Okay, you have to have a trading plan, and Fibonacci technical analysis is a great tool in your toolbox. Okay, that's what I like to say, is you've got these tools in your toolbox that help you. Well, to me, the Fibonacci work is the hammer or the screwdriver. Okay, it's the two things that it's the thing in your toolbox you have to have that's one of the main things in your toolbox. And symmetry is an extremely powerful tool for your trading plan. Symmetry, like I said earlier, is also known as price projections, the comparison of swings in the same direction and how those swings are similar and or equal. One level is enough for a setup. However, more than one symmetrical line will sometimes overlap the others, okay? Because of there being similar swings over and over and over again. So this is IWM daily. This is a great example of an area where back in July of this year, okay, not that long ago, had a great setup here. I had 4 different areas where you have price symmetry. Okay, so look at all those different lines where you see the blue lines, blue high to low. One is $11.49, one was $10.92, one is $10.75, one is $11.35. Okay, so I go high, low to the more recent high. I came back to that 17th of July high 4 different times to find those 4 different pieces of symmetry there that gave me that setup zone. Okay, and as you can see, it held and continued that move up. As far as SPX cash daily, there were 1, 2, 3, 4, 5, 6 pieces of symmetry that formed that setup on the 2nd of May last year. I mean, that's just an incredible amount of symmetry. We see this kind of stuff all the time. This is Pfizer. Symmetry can be used to find new risk on a move that has already taken off. And I've got a lot of examples of this recently. I was just looking at, actually happened today on some of my intraday time frame charts that we give live. But this is a great example of, in the original setup, had 2 pieces of symmetry, and it bounced from the 17th of June, and then it took off, and when we pulled back on the 18th of July, we had price symmetry there. So if you miss the initial setup, and sometimes you don't want to take the initial setup because the moving averages are on the side of the bears. I mean, that initial setup was not as enticing as the setup on the 24th of July, because the moving averages on the 24th of July looked better at that point. But the good news is even though the moving averages were on the side of the bears with that initial setup on the 17th of June, your risk was very clearly defined there. And I remember I took this setup. I actually am still holding on to the Pfizer. That was the setup that I personally took. I put it in my account and my daughter's accounts, and I'm actually still holding on to it. You know, I'm planning on holding on to it for a while. As far as symmetry is concerned, it helps to determine the trend of the market. Resistance would suggest a bearish trend. Okay, so if you're looking at low to high from the more recent low, you are looking at symmetrical resistance. Support is when we go high to low to the more recent high. That is a bullish trend. So we're looking for resistance in a bearish trend, support in a bullish trend. It can be also used, symmetry can, to determine where a move may stop. Okay, so if you're past the target extensions are the green 1272 and 1618. If you're already past them, and you're like, wow, where's this move going to stop? We're already past the target extensions, and what we always say is many moves to the terminated extensions of prior swings. Where could this move possibly stop? Well, then we start looking at symmetrical projections, okay? And then on Lily, this is a great example of that. I set this up for clients. I actually set it up for my husband too. Many of you know Bruce Marshall. That's my husband, who's also an options trader. So this is a setup on Lily where I looked at the low from the 3rd of May 2024 to the high of 23rd of May 2024, projected it from the more recent low of the 2nd July, because we had already gone through the target extensions, and we're going, hey, where's this move going to stop? Is it ever going to stop? That's the way it felt at the time about Lily, right? It just could not be stopped. But look at that, 2 pieces of symmetry, and it stopped, and it fell hard, okay? Fell really hard off of that. Let's see, I had know if I have this chart in front of me or not. Yeah, I do. So here's a great example. Well, I'll have to show it to you after the presentation. Well, I don't know if I can move over these charts real quick. These are the live charts I give in the room every day. This is an example of something that I did today. It was a symmetrical projection. We were already past the target extensions of some of these previous moves here. Okay, so I made a symmetrical projection and said, hey, we could stop at that 59.17, plus we had timing for a high there. But that's a great example of something that I do live in the room. You see that while you're trading during the day. Live charts, amazing. As far as, let's see, how to find symmetry. Okay, Carolyn already touched on this, so I'm going to get through it pretty quick. But you use a three-pointed tool to measure from a low to high to the, so it's from a low to a high projected from a more recent low to find resistance, and from a high to a low projected from a more recent high to find support. All right, and Carolyn already took that, so I'm not going to spend too much time on it. As far as Fibonacci price projections, they're measured from 3 points in the chart. Okay, we already went over that. We use 100%. Sometimes we use 1618, but not very often. But sometimes we do use that. Symmetry for support, we run prior high to low, swings from a prior high. We've already gone over that. This is XLY. This is a great example of a weekly chart. Okay, so I don't just do daily charts. We don't just do daily. We do intraday, daily, weekly, monthly. Okay, this is a weekly chart that a client actually asked me for. That's another thing you get to have in our room. You get to make chart requests every Monday and Wednesday. Okay, I post a chart request tab link on Elliott Web Trader, and I say, hey, if you have a chart request for today, put it here, and I will run it for you. So here's XLY, another great example of symmetry. We had two previous swings projected from the high on the 1st of March 2024, came down into price support, hit, held, and basically pretty much met both those targets on the upside. A rally of $25.89. As far as Disney is concerned, this was a great setup in January of this year. Now, this is another chart where I'm going to tell you it did not look great when it bounced, did it? Okay. You were below the 200, below the 50, I was below the 13, but you do have that defined risk around the $89 there. It hit, held, and ended up making all three targets on the upside. Disney had a really nice rally earlier in the year. As far as a 10-minute chart, this is what I was just telling you about when I pulled over my other set of charts. I do live 10-minute ES and NQ charts. Those are the futures for SPX and NASDAQ. On this 10-minute chart, it's a great example of symmetrical support. We had held at 53.37, met both the targets on the upside. As you know, if you are trading futures and you've had a rally of $12.75, that is a nice win in your pocket. As far as GBTC, okay, here's a nice setup for my crypto traders there, okay? That hit and held out of the 23rd of January, met the first target on the upside. Nice rally of $11.69. This is gold, GLD. Okay, nice rally of $11. That's a huge rally on gold, especially if you're trading futures, right? We also do gold futures in the room, and we do crude futures also. And there again, if you trade bonds, corn, wheat, anything else like that, we will also run that if you make a chart request. As far as symmetrical resistance, we already went over, we run it from a prior low to high and project it from a low. This is an Amazon 30-minute chart. Yet there again, a live chart I give in the room. This was a bearish sell setup. The reason that I set up the set of the bears on Amazon is because on our intraday charts here, we use 8 and 34. The blue 8 is below the red 34, which means this is a chart that you want to short. So we had that previous low to high swing projected from the low on the 17th of April that gave us symmetrical resistance at 182. We held. I also gave timing for a high. You can see that at the bottom, the histogram timing. Timing for a high, hit and held symmetrical resistance, met all three targets on the downside. Crude 30-minute chart, held a 236 and symmetrical resistance, met both the targets on the downside. There again, blue 8 is below the red 34, so this is a bearish chart. Crude M contract, okay, held symmetry plus the 618, met all three targets on the downside. I mean, look at that move. What a great move in crude if you are trading futures. Wow. ES 120-minute chart, okay, this is, and you can use this to trade SPX cash and SPY, of course, right? You can use these charts to, you know, trade. You can use the IWM chart that we give every day. We give IWM 30 and IWM if you want to trade futures on that too. You can do that, right? So here on ES 120-minute chart, we held. It was a bearish two-step. That's another kind of setup that we give. We met all three targets on the downside. That was a nice failure. Let's see, over 70 points. What a nice setup there on ES. As far as gold, okay, gold is another one that I set up every single morning. This was the 30th of April. You can see right beside the date in the upper left-hand corner, there's actually the time at 9 a.m. I set this up before market open because I usually try to get the futures charts before the market opens. We failed off symmetry, met all three targets on the downside. And speaking of before market opens, now this morning this did not happen, but most days I try to get live charts up for you, futures charts up for you well before 9 a.m. Eastern. We say that they're up by 9 a.m. Eastern on our site, but I usually get them up, you know, between 6:37 a.m. Eastern. Okay, so it's really nice for you futures traders. If you're trading futures and you're wanting live charts in the morning, I usually try to get those up for you. Symmetry is a great for trade setups, but when it can be violated, it can also provide information that can help your trading another way. Because if symmetry is broken, it will also often lead to a deeper downside correction and many times indicate a change in trend. Okay, so it can say, hey, wait, we have a situation here. So here is an example of that. This is SMCI. This was super popular, right? Earlier this year, people were going crazy over this stock. And it had a nice, you know, it took off. It got all the moving averages on the side of the bulls. It was looking great. I set up that pullback and it initially bounced on the 1st of July. Then it came up and hit a retracement. That looks like it's probably a 786 that it came up and it failed. Then it came down to retest that support, and you can kind of see that for a few days it kind of kept bouncing off of it. But this is another thing that I say, hey, listen, when we keep knocking on that glass, a lot of times it means that we're going to break it. And that's what happened. We ended up breaking through that 782 area. And when that happened, I said, hey, we've broken the symmetrical resistance of this swing up. So from that low of that 22nd of April to the high on the 20th of June, then you project that previous swing and say, okay, if we break 782, there's a good chance that we're either going to take out the low from the 22nd of April or make a deeper downside correction. And what happened on SMCI? Made a much deeper downside correction. So that's a warning to you. You know, those are nice to have. So HEMS, okay, this is an example of when the symmetry was broken all the way up, suggesting that we have a low in place and the stock is going to continue to rise. All right, so I projected the symmetrical resistance from the 21st of June to the 25th of June, projected from the 27th of June low, right? When we went through and busted that symmetry at $21.35, that told me that this move was going to continue up. and that is what happened on Tammy's. All right, let's recap this real quick. Symmetry can be used to determine support, resistance, and also projections where the market may turn. When it's broken, it may also indicate a deeper downside correction, or it could also, if it's broken, indicate a deeper upside correction, right? A higher upside correction, I should say. So the Fibonacci Princess, myself, and the Queen of Fibs are here to help you control your risk. Please join us in our live trading room at Elliott Wave Trader. Thank you for joining us today. And that is it for my presentation. Let's see, I'll go back here. And looks like y'all have been answering some questions, asking some questions. I have not been able to keep up with them yet. But see if I can look back here. So yeah, for the different time frames, I see that Carolyn answered this. We use, yeah, you can use 513 or 834. The 5 and 13, of course, is going to be more aggressive. The subscription is 2 weeks free without a credit card, and then $149 after that. We do the charts for you. Yep. Yeah, we provide charts in the trading room from open to close, and other charts are posted. Yep, and we also do videos, y'all. There's a morning video at 10:30 a.m. Eastern, and then when the market closes, Carolyn does an evening video. So I do the morning video, and from the time before the market open until 10:30 a.m., I am giving you charts that are updated. You know, I do the future charts before the market opens because they've been going all night, right? And I'm able to go ahead and do them. And then after the market opens, I update the charts that are available to be updated after the market is open because we use the after market open data, okay? And then we do videos. As far as trading options, I notice on waiting 834 cross passes the prior high. Should I wait on options price to pull back? You can wait for a pullback if you want to. Yes, I like the way Carolyn answered that. Are there any other questions? Does anybody have any other questions for us at this time? I don't know if I can. If you want me to give you back presentation status or not, Carolyn, but if you need me to, let me know. Yeah, type in here.
Okay, I think I took it back, but I have to make sure that let's see if it's doing the right screen. Yeah, number 3. Okay. All right. Yeah, somebody asked, I mean, if you're interested, I'm going to give you my email real quick and I can send you the slides if you want to check them out. I know it's an old email, don't laugh, but here it is. All right, and then I'm still here, so if there are any questions that I need to address, let me know. I know somebody asked if or what we have in the trading room. So we do a 120-minute chart of NASDAQ and a 10-minute chart of NASDAQ futures, S&P futures, 120-minute chart and a 10-minute chart in S&P futures, and then we have we have Apple, Tesla, Nvidia, Amazon. Yeah, and those would be the other 4. So we have those up all day long, but also multiple charts are posted. Let's see if I can give you an example. I think you can see my my screen now, but let's go to all post. This is where we're at, Fibonacci markets and stocks. But you'll see throughout the day, like, here's a bunch of charts like Microsoft, Netflix, Silver, Roku. We also do requests twice a week. Okay, so, we have plenty of charts that we do, every day, but then you know, if it's a request day, you get us to look at some of the charts you might be interested in personally. But definitely there's plenty of charts during the day. Also, as far as the screencast, it is on a Zoom, so you'll have it on Zoom, but the actual, you know, chat section is going to be on the website. And the reason why we do that is that you can go back and check what was said during the trading day. Okay, so that's helpful. So we also do have a setups feature, and I'm not going to tell you that I do it every single day, but like when we see something that's stand out, we'll put it out here. And you can also get SMS updates on your phone if you set that up. As far as the trades, the question is, are these short-term or long-term trades? Both. I mean, you can use the levels on the daily chart, like I said, and you can use that for a day trade if you want. And what about, we don't do S&P cash intraday, we do the S&P futures intraday. Let me see what other questions there are. Yeah, well, we used to be with a place that mostly focused on options. So there are people that will do outright puts or calls, but you can also, you know, do vertical spreads. There are other people that will use the butterflies. I'm not going to lie to you. I still don't understand how to do a butterfly correctly in options, but you know, as far as you know, can you do a call credit or debit spread? Yeah, you can. And let's see if there's anything else that I missed. Well, it's going to be hard to scroll through this. All right, if I missed a question, please just retype it, because trying to go through all these ones in the past, I'm not sure that if I missed you or not. But again, it's easy, you know, it's easy to try. You can do 2 weeks free. You don't even have to have a credit card, and see if it makes any sense, you know, and then just don't take it beyond if it doesn't make any sense to you. I haven't really done a webinar showing you how to do it. I mean, I do that like when I teach classes, but if you want some basic stuff, honestly, I would just go to YouTube and say how to run a retracement. I mean, we're using a different program. We're using the dynamic trader that was created by my mentor. And, you know, that's, I mean, you can obviously get that program if you want, but it's, you know, it definitely has to be paid for, and you have to have your own data source. Will I ever use any other trade? I don't plan on ever using the others. I've done examples on TradingView, so I know that you can do the price work on there. It's just not as easy to read for me as the program that I use, but you can use other software. Yeah, my update is actually not live. My update is after the market closes to prep you for the next day. Okay, and we also have another gal in the trading room, Shannon. So Shannon and Tammy are actually running all the charts throughout the day, and I do some extra charts that I post in the trading room. And also I look for if there's any questions in the room, and then I do the end of day video, and then you know, add all the, you know, all the charts that you need for the video. Yeah, I don't have the 10-year data at this point, so I can't really do that. But one of the things, you know, if you sign up, you can ask for the 10-year on one of the request days. I mean, I don't have it set up in my program. Let's see. Oh, you can't see the questions. Okay, sorry about that. I think it's a little bit too late on that. So do we do long-term views of Spider and QQQ? We don't typically do those. We do the S&P cash, and we do NASDAQ cash, okay? But again, you can request it on the request days if you want it specifically for QQQ or Spider, but there are people that do use our work in the S&P futures and just trade it in the Spider or the QQQ. So there's only so many charts we do, and we do plenty. Yeah, sorry about that. Forgot you guys couldn't see the questions that were being asked. All right, well, anyway, you guys also have I gave you my email. If you have any questions, you can feel free to send me an email. But I think I'm going to go ahead and wrap this up. And like I said, if anybody wants a copy of the presentation, you can email me and I'll give it to you. And we're going to try and get up a recording for you possibly by the end of today. I'll see if I can post it on Twitter. All right, that's it. Thanks for joining, everybody, and see you out there.